Let's take it to New York because tonight the stock market is coming off a big boom day. You got record highs after that first Fed rate cut in 4 years. Look at the markets here tonight. You had the Dow, the S&P, green, green, green. Same with the NASDAQ, beating all-time highs, the Dow and the S&P at least. The NASDAQ up something like 2.5%. This is after the Fed cut interest rates by 0.5% instead of the 1/4 point that experts thought. So everyone's like, whoa, what's the economy? What are the markets going to do now? That rate cut, it's a big deal for anybody because it could pave the way for lower interest rates on everything from new car loans to new mortgages to your credit card bill. Of course, all of it happening with the presidential election just now 6 weeks away, just about. Not that we're counting every minute and second. We do count the voters because we know that what they count on is politicians to tell them what they're going to do about the economy. That's the #1 issue, along with immigration, to them. Let me bring in CNBC's Mike Santoli, who's following this for us from the floor of the New York Stock Exchange. Mike, we're so glad to have you with us tonight. There is some thinking, right, that a 0.5-point rate cut would spook the markets because it would signal that the Fed was a little bit concerned about the economy and where it was headed. So there were lots of eyes watching today. I know you guys at CNBC were all over this. Here we are. The markets are closing up in the green in a really positive territory. Help us understand why.
Well, Hallie, I think it starts with the preceding few days before this Fed decision yesterday, where the case started to be built by, well-connected reporters and former Fed officials and other Wall Street economists building the case for a 0.5-point cut in interest rates as more of a prudent first step toward a more normal level of interest rates, happening to preserve a soft economic landing as opposed to responding to imminent weakness. I also think that we came along with some pretty good economic data in recent days. Retail sales better than expected yesterday. We also got weekly unemployment claims today that were lower than forecast. And all that built into this idea of what Fed Chair Jay Powell had to say yesterday after the decision, when he tried to essentially convey that he views this 0.5 percentage point cut as kind of insurance and getting rates back toward normal as almost a victory lap over inflation, which, of course, the rate of inflation has come down from 9% a couple of years ago to about 2.5% right now.
So what do people need to be thinking about, right, as far as it relates to their portfolios, as far as it relates to their money? It's a fool's errand to make predictions about sort of where the markets are going and how the economy is doing, but it is undeniable that all of it's happening just about 6 weeks out from a key presidential election.
For sure. I mean, what history says is if there is no recession, let's say within the next 6 months after a Fed rate cut, stocks continue to do well. I mean, that's a big if, obviously, but right now you're not seeing in the current data anything that says we are on the precipice of a recession, which would, of course, mean the unemployment rate going up a lot from here. The Fed officials' actual outlook yesterday was for maybe unemployment to inch higher from here and then maybe stabilize. So if that comes to pass, essentially, this was more of an insurance cut. And there are going to be more to come, probably smaller ones down the road. As it comes to policy and perceptions of the economy, I mean, that's something that's kind of been in play for a while, and it's tough to change just in a few weeks.
Yeah, the way people feel about the economy versus what it's actually doing. Mike Santoli, we're so glad to have you with us tonight from down there at the Stock Exchange. Thank you.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.